kind of the perfect transition to my next guest, who is a small cap value picker. And we didn't even do that on purpose today. Let's bring in Sandy Villere. He's a portfolio manager at Villere Co. Sandy, that's like the perfect pitch for you.
Yeah, absolutely. I mean, we just think that growth has just had too much of a run. I mean, last time I was on, I was telling your viewers, growth, especially the Magnificent Seven, I mean, up 35% year to date. Time to take some profits and look at the value area that's only up 2% year to date. And I think just kind of, hitting that point home, listening to Powell on Wednesday, when he's just talking about rates being higher for longer. I mean, I think the market totally got it right, selling off tech and watching bond yields, pretty much surge, to 16-year highs. So we definitely want to be in that value-oriented area. Think there's a lot of opportunity there.
Even in, Palomar, might say, okay, that's more of the insurance play. Pool Corp, right? Caesars, that might make some people know. These are names that you think are interesting, are attractive, and despite everything that Dan just said, I'm pretty sure most viewers go, I just think there's more momentum and growth. Look at the track record.
Yeah, and I think people will get their opportunity in growth. I think you're going to see a 10 or 15% correction in a lot of those names. It's just the way the math works with higher rates. They should pull back. And 2022 wasn't too long ago when growth was down 35%. But as far as my names, some of the names I mentioned today are more growth at a reasonable price as opposed to some of the boring value names that we do have here at Villere Co. And so when you look at a Pool Corp, you go back historically, the only time you can really buy it is when there are these macroeconomic headwinds like housing starts. I mean, they are tied to new pool construction. And so, they will have 70,000 pools this year. But that part of their revenue, as far as, new pools related to the company, is only 17%. The majority of their business is just boring repair and maintenance of your swimming pool. So as long as people don't let their pools turn green or black or fill them in, right, every pool built is another annuity. So we like it a lot.
So let me ask you, Sandy, just kind of the 30,000-foot question as well. What is the impact higher interest rates is having on small caps? Because after listening to Dan, I'm thinking, that better be one of the top screeners you're running, is to make sure that you're, staying away from companies. I don't know how much of them is floating. I'm sure a lot of these can still do fixed rate issuance, but still.
Yeah, no, it's definitely an issue. And when you look at Caesars specifically, I mean, they do carry a lot of debt. All casino companies do. And so that is one that's going to, frankly, I think that's what creates the opportunity, because it's been marked down a little bit due to higher rates. So things like that make me, kind of interested if there's a short-term, blip on something, usually a good buying opportunity. So definitely want to watch how rates impact everything. And those that carry too much debt are going to be, somewhat exposed. So you definitely want to be careful looking at every individual company from a bottom-up oriented standpoint.